Welcome back to the deep dive. Today, we're going deep on this earnings call transcript
Oh, yeah.
from Prudent Corporate Advisory Services.
Okay.
They're a big deal in the Indian mutual fund world.
Huge. Yeah, this is a really cool look into how they operate.
Yeah, and especially because this call happened in January of 2025
Oh,
when the
okay.
markets were kind of all over the place.
Definitely a volatile time.
Yeah, so we'll get to that.
Okay.
But first, I got to talk about how much Prudent has just blown up over the past decade.
Yeah.
Their assets under management,
Mhm.
their AUM, it's grown like 36% every year,
That's wild.
which is twice the industry average.
I mean, that's incredible growth, and it really shows you how powerful this trend is.
Yeah,
We're
yeah.
seeing this globally too. The companies that pair a good platform with smart technology,
Right.
they're the ones pulling ahead.
And Prudent, they really give a lot of credit to their tech platform, Funds Bazaar.
Makes sense.
And they have the numbers to prove it, too.
Okay.
They actually compare their top distributors, the ones who are really using Funds Bazaar,
Yeah.
to those who aren't.
Right.
And the difference in growth is massive.
Oh, wow.
We're talking like 45% annual AUM growth for the tech-savvy folks
Okay.
versus like 30% for the others.
Wow. So like if you're a financial advisor and you're really good with technology, you can manage way more clients
Yeah.
and your business will just take off.
Yeah, they even had some really specific examples in the transcript.
Oh, interesting.
Their top 200 Funds Bazaar users,
Yeah, okay.
they each manage something like 730 clients on average.
Wow.
But then you look at users ranked like 800 to 1,000 on the platform,
Okay.
they only manage about 164 each.
So that's a huge difference in how much money you can make
Right, and how many people you can help.
and how much of an impact you can have.
Exactly. It really shows you that in finance today,
Yeah.
embracing the right tech can really change the game.
It's not just about cool gadgets anymore.
It's about reaching more clients, growing your business faster.
Yeah, technology is a must-have.
So lesson one for our listeners.
Okay. I like it.
Tech isn't just a cool gadget anymore.
Right.
It can make or break your business.
Totally.
But, okay, back to that market craziness.
Oh, yeah, in January 2025.
Yeah, the transcript shows that Prudent wasn't totally immune,
Right.
but their response was really interesting.
Okay, how did they handle it?
Well, they admitted that their AUM dipped
Okay, makes sense.
because of the market correction,
Sure.
but then they immediately pointed to how strong their retail investor base was.
Oh, smart.
They talked about having strong net sales,
Oh, wow.
which means more money coming in than going out, even with the market downturn.
Okay.
And then they highlighted their growing SIP book.
Okay, now for those who don't know what that is.
Right, SIP stands for Systematic Investment Plan.
Okay.
Basically, investors make regular recurring contributions.
Okay, got it.
And Prudent was adding like 2.4 million US dollars to their SIP book every month.
Wow, that's a good sign.
Yeah, it shows a lot of investor confidence even when things are uncertain.
Right, because if you're still regularly investing,
Yeah.
you must believe in the long-term prospects.
Exactly. And it just shows that having a solid base of investors who are committed for the long haul can really help you weather any storm.
Definitely something for all businesses to think about.
Absolutely. How do you cultivate that kind of loyalty?
That's a big question.
Huge.
Yeah.
Okay, but Prudent isn't just about mutual funds anymore.
Really?
They're
Yeah.
branching out into other financial products too,
Like what?
like insurance fixed deposits,
Hmm.
even things like portfolio management services and alternative investment funds.
Oh, wow. So they're diversifying.
Yeah, and it's a really smart move.
I mean, it's like they're not putting all their eggs in one basket,
Right.
so they can handle those market ups and downs better.
And they're tapping into these new revenue streams and they're meeting the changing needs of their clients.
That's super important.
Oh yeah, and they specifically mentioned the potential of PMS and AIF products.
Okay.
They call them trail-driven.
Trail-driven.
Yeah, so basically these products generate this recurring revenue for Prudent as long as the client stays invested.
Oh, I see. So it's like a steady income stream.
Exactly.
Right.
It's a smart strategy for stable, long-term growth, and it
Oh.
shows that they're thinking ahead.
Right, because the financial world is always changing.
Oh, yeah.
And the companies that can adapt and offer a wider range of solutions, those are the ones that are going to thrive.
Right, so it's like another lesson.
Okay.
Stay flexible, offer a range of services,
Yeah,
and you'll be able to navigate any market condition.
makes sense. But speaking of challenges,
Oh!
things get really interesting when we look at this whole commission structure.
Oh, yeah.
Yeah.
Yeah, the transcript shows there's like this tension building
Oh, yeah.
between Prudent, the distributors they work with,
Right.
and the asset management companies, the AMCs,
Got it.
who actually manage the funds.
Yeah.
And it all comes down to like commissions and fees.
Right? Everyone wants their piece of the pie.
Exactly. And it's fascinating to see how these different players are trying to balance everything.
Definitely.
So walk me through this. What's happening here?
So Prudent is actually increasing the commissions they pay out to their distributors.
Wouldn't that hurt their profits?
It seems counterintuitive at first.
Yeah. Why would they do that?
They're playing the long game.
Okay.
They know that if they incentivize their distributors with better commissions, they'll attract and keep the best people.
Makes sense.
And those top performers will bring in more AUM, which ultimately boosts Prudent's revenue.
So they're basically investing in their sales force.
Exactly. And it's a win-win
Yeah.
for both Prudent and their distributors.
Okay, but they're not just throwing money at the problem, right?
Right.
They're also giving their distributors the tools and resources to succeed.
Definitely the transcript mentions how much they focus on technology and training,
Right.
and that helps those distributors be more efficient and effective.
It's like if you're asking your team to step up their game, you got to give them the support they need to do it.
Exactly.
But okay, what about the AMCs? Where do they fit in?
That's where the tension comes in.
Oh.
Some AMCs are starting to lower the commissions they pay to platforms like Prudent.
Oh, wow.
They're saying it's because of pressure on their own margins.
So Prudent is getting squeezed.
Kinda, yeah.
Costs going up on one side, revenue shrinking on the other.
It's a tricky situation.
That sounds tough.
It is, and it's a perfect example of how changes in one part of the value chain can impact the whole system.
Yeah, like a domino effect.
Exactly. And it raises some questions for us, the listeners.
Like what?
Well, can Prudent keep making money with this new commission structure?
Right?
Can they still reward their distributors and also keep their own business profitable?
That's a good question. And what about the bigger picture?
Yeah.
How will all these commission changes affect the whole landscape of financial product distribution?
Right. Will we see more consolidation, or maybe smaller players getting pushed out?
These are some big questions.
Definitely things to watch.
Yeah, but remember, Prudent isn't just sitting back and letting these changes happen.
Right.
They're making moves to adapt and stay ahead.
Absolutely.
We talked about their diversification strategy,
Yeah.
moving beyond just mutual funds into things like insurance,
Right. They even mentioned getting into health insurance.
which is huge, especially in India.
Huge market, yeah.
And they see a big opportunity there.
Makes sense.
They already have this big distribution network. They've built trust with their clients.
Yeah.
And they have the expertise to advise on the best insurance products.
So they're not starting from scratch.
Right. They're using what they already have to tap into a new market.
Smart.
But you mentioned some challenges they faced in insurance, too.
Oh, right. There were some regulatory changes.
Yeah, something about surrender values.
Yeah, that impacted their insurance sales in the previous quarter.
So even a company as successful as Prudent,
Yeah.
they can't escape those regulatory curveballs.
Nope. It's part of the game.
So how do they handle that setback?
Well, in the earnings call, they addressed it directly.
Okay.
They acknowledged the challenges, but they also seemed confident that things were stabilizing. And they highlighted the growth they were seeing in January, particularly in health insurance.
So just a temporary bump in the road.
Exactly. Not a major derailment.
Sounds like they're handling things pretty well.
Yeah, and it's a good lesson for our listeners.
Yeah.
Even when things are tough, a good strategy and a willingness to adapt can keep you growing.
Totally. Now, apart from commissions and diversification, was there anything else in the transcript that really stood out to you?
You know, there is one thing that I thought was really interesting.
Okay.
They briefly mentioned it,
Okay.
but I think it has big implications for the future of financial services.
What is it?
Prudent talked about how important personalized financial advice is becoming
Okay.
and how technology can help deliver that advice to more people.
So it's not just about selling products anymore.
Right.
It's about understanding each client's individual needs and creating solutions just for them.
Yeah. The days of one-size-fits-all financial advice are over.
Makes sense.
Clients want personalized solutions, and they want advisors who can guide them through all the complexities.
It's a lot to navigate.
Yeah, and that's where technology comes in.
But how does technology help with this personalized approach?
Good question.
I always thought technology was about automation
Yeah.
and replacing human interaction.
It's not about replacing humans, it's about giving them superpowers.
Okay, I like that.
Think about it. AI-powered tools can analyze tons of data about a client's finances, their goals, their risk tolerance.
Wow.
And that lets advisors give much more personalized and insightful advice.
So instead of being buried in spreadsheets,
Yeah.
advisors can focus on building relationships and understanding their clients.
Exactly. It's a much more human approach.
And technology can also make financial advice more accessible and affordable.
Right. Think about robo-advisors and online platforms.
Yeah.
They're making it possible for people who couldn't afford traditional financial advice to get help.
That's awesome.
Yeah, it's really opening doors.
This is painting a whole new picture of what financial services could be,
I know, it's exciting.
where technology and human expertise work together to create a better experience for everyone.
You got it. And it's great to see companies like Prudent leading the way.
Right.
They're investing in the tech, the training, the partnerships they need to deliver this personalized advice to everyone.
So listeners, if you want to see the future of finance,
Yeah.
pay attention to what companies like Prudent are doing.
They're not just selling products anymore.
They're building platforms and ecosystems that could totally change how we manage our money.
And how we achieve our financial goals.
It's a really dynamic time to be in finance,
Definitely the changes are happening fast and the opportunities are huge.
especially for those who are willing to innovate and adapt.
Absolutely.
Okay, so before we wrap up our deep dive
Yeah?
and share some final thoughts, I'd love to hear what you thought was the most insightful part of this Prudent earnings call transcript.
Oh, it's a tough one.
I know there was a lot to unpack.
There was.
Oh.
Oh, that's a tough one.
I know there was a lot to unpack.
There was a lot to unpack, but I think what really impressed me was how Prudent is handling this whole commission situation.
Yeah.
They're not just taking it lying down, they're really trying to shape the conversation.
Yeah, they're making a strong case for how valuable they are.
Exactly.
Yeah.
They're highlighting the benefits they bring to both sides,
Yeah.
to the asset management companies and to the distributors.
It's not just about taking a cut.
Right. It's about providing these essential services that connect everyone.
It's a good reminder for all of us, no matter what industry you're in.
Totally.
You got to be able to explain your value
Yeah.
clearly and effectively.
It's not enough to just do a good job. You got to be able to show people why what you do matters.
And another thing that stood out to me was Prudent's long-term vision.
Oh, yeah. They're not just focused on short-term profits.
They're building a sustainable business.
Exactly. And you can see it in their actions.
Right.
Investing in technology, building relationships with their distributors, diversifying what they offer.
They're in it for the long haul.
Yeah. And that sets them apart.
Definitely. So you mentioned you had a final thought for our listeners.
Oh.
Something to really get them thinking.
Yeah. What if the future of financial advice isn't just about picking stocks or managing portfolios?
Okay.
What if it's about helping people achieve their life goals?
I love that.
It's like financial planning as a tool for a fulfilling life.
Not just about money.
Exactly. Money is just a means to an end.
So, like, financial advisors become more like life coaches.
Yeah, helping people align their money with their values and their dreams.
That's a game changer because, let's be honest, most people don't get that excited about spreadsheets or market reports.
True.
But they do care about their families, their passions, their goals.
Right. So what if financial advice was part of every part of our lives? Helping us make smart decisions that make us happier and healthier.
That's a powerful vision.
It is.
Makes me wonder if Prudent is already thinking about this.
I don't know.
Are they looking beyond just financial products towards a more holistic approach?
That's the big question.
It is. And it's something to think about as we keep exploring this ever-changing world of finance.
Lots to ponder.
So, listeners, that's it for our deep dive into Prudent's earnings call transcript.
We covered a lot.
We did. We learned about the company, about the industry, and even got a glimpse into the future of financial services.
We saw how Prudent is adapting to the market, embracing technology, empowering their people, and offering more diverse solutions.
And all while staying focused on helping their clients.
Exactly.
We also talked about some big trends like the changing relationships between different players in finance.
Right, and the rise of personalized advice and potential of technology to make things better for everyone.
Now it's your turn. What resonated with you from this deep dive?
Yeah, what questions do you still have?
Let us know your thoughts. They might just inspire our next deep dive.
Until then, keep learning, keep exploring, and keep diving deep.
See you next time.